Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm thrilled that you're here. And I'm super excited to interview my friend today. His name's Randy Lawrence, and Randy and I met through a mastermind that I used to belong to. You know how much I believe in masterminds and, host my own as well. Randy's been in this business for a long, long time. He's got 1,100 doors. He's going to close on another 350 here in short order. He's been in this business in the single family and the multifamily space for decades. But he's also just an amazing guy. He's a community leader. He's founded a church. Started out as a wealth manager. I'll let him get into his history. But welcome to the show, brother.
Awesome, man. Praise the Lord, brother. Good to see you, and glad to be on the show.
Oh, I'm glad you're here, buddy. So why don't we start with, just giving us a little bit of background of, who you are, where you're from, and how you got to, this incredible, I guess, in excess of $100 million portfolio. Take us back.
For sure. So I started off, I was a stockbroker, registered investment advisor, had, my degrees in finance economics. That was the thing. That was back in the 80s with the Wall Street movie and Gordon Gekko. And so I did that. But then in the course of doing that over that 15-year span, I really recognized that it wasn't all that it was cracked up to be. I bought my first duplex property in 99, and I began to see like the power of what real estate could do. And so that was, really where the transition came, where we started our company in 2003, private equity in real estate, and later sold my money management company in 2006 to focus exclusively on real estate, because it's just, a better mousetrap, in my opinion. And so that began the journey. And, over that course of time for the last 17 years, we've, had bought dozens of smaller apartment complexes, probably 1,000 plus houses. And then in the last, 5 years, really focused on the larger multifamily properties. And really that's our genuine core focus now. My original mentors back in 99, they owned probably about 2,500 doors. It was a family from church. Mm-hmm. They, built up from smaller multifamily to large scale, and, they just owned it outright. And so that was kind of the model of, learning from them and kind of running that path.
Yeah. Yeah, owning it outright. Now that's real money right there. Okay,
yeah,
that's real
sure.
money.
Yeah. So, and I mean that's not where we are. Of course, at this time we have investors that invest with us, but It really set the groundwork for the focus of what the bigger apartment complexes can do.
Right. No, I love it. So where did you start? Where was that duplex in 99?
So the duplex in 99. I live here in Florida on Indian Rocks Beach, just of course, right up the road from you. And probably just a couple of miles away in Seminole was where I grew up. And literally probably a mile from where I grew up, bought the first duplex.
Okay. All right.
Right
I was just curious if you were a transplant. So you're a cracker from,
I pretty much, I've been here since I was like 4 years old. So it's,
Okay. By the way, guys, if you've been in Florida, your whole life, you're called a cracker, a Florida cracker. I don't know if it's derogatory or not, but
no, it's just like the old school thing, man, Yeah, for sure.
So, you've been in the business a long time. I think a topic that I know that you're great at that I'd like to start with is, you guys know this business is a team sport, and Randy is a master at building and growing a team. So can you speak to that a little bit? Because in the single family world, you don't really need a team, but in this multifamily world, you do. Can you elaborate?
For sure. Absolutely. I think, first and foremost, it starts with what you just said. You've got to acknowledge that you need to have other people with you. There's a lot of lone rangers or kind of solo practitioner. And it starts with one, recognizing you've got to have the other people with you, because it's just going to be critical. And then once you've identified, who those team members are, that's, paramount as well. You've got to have the right people that are a part of your team. And so identifying what does that look like? So for us, it's like, okay, you've got to have the right management partnership, whether that's your own management company or a third party manager that you're working with. You got to have the right kind of boots on the ground, if you will, in terms of, people that are going to be doing the due diligence on the projects. You've got to have the right on-site managers. That's huge. If you don't have the right people in the seat there at the complex, man, you're in trouble. And even down to the the maintenance staff, so all these different team members, I think you have to clearly identify. And I think sometimes it is people don't know what they don't know because they don't know it, right? So they just blindly accept, okay, this person's here, but you've got to really drill into understanding who is this person, what are their qualifications to be a part of your team, and not making an assumption, oh, they're okay. Because there's plenty of complexes we've taken over. The manager's been there for 5 years and done a good job, but really has been underperforming the market for the entirety of the 5 years. And then they don't have the ability through coaching, training, and equipping to kind of rise up to the next level. And then so we've had to make a change, And so I think that at first you got to recognize you need a team, and then really with succinct measure, identify who those participants are.
So, one thing I want to flag that you said is did you hear how he described, the management team? He called it a management partnership, because even if you've hired a third party property manager, they are your partners. There's no question, and you need to take on that mindset, because you can live or die by the quality of that partnership.
For sure, make you or break you. I think that one of the things, I've got several friends that own management companies. And that's one of the kind of the things that they don't like, is they got the one-off Johnny that comes in as the rogue guy trying to, tell them what to do. And it's like, it's disfavorable. And so then it's not really a partnership relationship. It's, I don't want to say adversarial, but it's just not quality. And you want to have a quality relationship. And I think especially as you enter into that, if you know you're going to be in this particular market or submarket, that's where you're saying, hey, we're going to develop and grow here, and we'd like to grow together. Yeah. And so that's part of the thing where you're setting the tone out of the gate to have a profitable partnership or relationship with them. Right. So we went right to management, property management. Let's finish up on that topic, but I actually want to back up and talk about maybe your core team. Absolutely. If you have one as well. 100%. Yeah. Okay. So you said coaching, make sure that they have the right coaching, training, and equipment. And I really like that. Can you elaborate on that a little bit? One of the things I think, and again, kind of a three core to your team is one is having the clarity of knowing what the mission is. 2, having the equipping to accomplish that mission. And then 3, the accountability to ensure that it's happening. And so in that equipping part, a lot of times people just do abdication instead of delegation. And where you're delegating them, but now you're also coming in and making sure that they've got the training, the equipping, or the coaching, and then the equipping and or equipment, tools and resources that they need. Because what happens, like let's say for that management, that the girl that was the underperforming 5-year manager, right, at that property we took over. Mm-hmm. So we come in, we assess, okay, here's what the goal is with this complex, the renovation plans, all that, the rents are whatever, $800, they're going to $950 because it's all new and renovated. Mm-hmm. And so we lay out the plan, and then now we begin to coach her on what is the, demographics of the area, the possibility, and then give her the tools and resources she needs for the marketing of it. And then the equipping or the coaching to say role playing. And then if you've done that along the way over a week or 2 week period of time, and then they're unable to perform to the level necessary to accomplish the task, then you've got a person that's really a 6 that can't rise to an 8. Mm-hmm. And maybe they're only able to rise to a 6.5. And again, a 65 out of 100, that's failing. And so that's where I think sometimes what I see people do in their teams is they just say, go do. Right. And then they don't really give them the coaching, the equipping, where they're coming alongside of them to help them. And then also saying, what tools or resources do you need to be successful with this? Yeah. And it's frustrating because on one level, it's more work, right? It's more work. but it also is the proper way to do it, because then you can now have a successful team member that's going to be able to run on their own, or you at least identify, hey, I've done everything as a leader I can do, and they're not going to cut it, and I've got to replace this person.
Yeah. And that's it's interesting. That pretty much applies to any business.
Yeah.
And that's really what this business is. It is a business. And
for sure.
It reminds me, you were talking about the equipping, and we took over the management of one of our assets that had been, not managed well by a partner. And we get there, and it's the property's almost a mile long, and they had one golf cart, and I've now bought 6. Okay. And they didn't have a big snake, and, to snake out the main lines. And they didn't have any equipment, and there certainly wasn't any training going on. So I really liked, and I've spent literally 6 weeks there over the last few months. And
I love too, like what you just said right now, people will have missed this, right? Mm-hmm. That's taking hands-on responsibility for the outcome when necessary, right? And people would go, oh, well, Randy, you're here, or Rod, you're up here talking on these podcasts. But no, it's like, look, what's going on at an asset. If a team member's faltering, hey, there's an ability to jump in and correct the ship, put the right people in place, and make sure she's sailing on track. And that's ultimately what it takes.
Yeah, no, there's no question. So let's step back a minute and talk about your. You talked about it in you having, of course, the management partnership, but let's talk about, the due diligence, your financial analysis. Now, you probably do that piece because you've got a finance background, but, there's several pieces in a multifamily team that have to be allocated. And very often, I'll see a partnership between someone that's super analytical, like my partner, Robert, and I, who's really more the mouthpiece, but he's becoming more of a mouthpiece too. I will say that he's been doing a lot of speaking, but I see that a lot. But talk about your situation. Is it just you? Do you have other people?
No, we have 7 people on our internal team.
Okay.
And so we developed that focus, just like we had scaled out the single family business to scale, and doing 75 plus of those a year. And so just that business scale systems mindset is how I've always approached things. And so even on when we were originally doing the original underwriting, yes, that was me, but then establishing the parameters, the criterion, and then bringing on an acquisitions person, so that then their role is to undertake all the underwriting. We developed actually kind of a spreadsheet concept. It's 2, legal size 10 by 14, kind of the crappy deals are on the back, and then they migrate their way to the front. And so we have a weekly report that we can go through, 20, 30, whatever many number of properties. And then I can see, okay, here's the top 5. Let's drill into this to really identify, what appears to be the best transactions. And so again, even when looking at that, and for people who are listening maybe and they're starting their journey or on their journey, when you're looking at it, maybe you're doing that role, but you're looking at it from that perspective of developing a system with the mindset of having somebody to come in and take over that responsibility. And
so this acquisitions person, are they the ones that are calling the brokers weekly to say, hey, what have you got? And they're getting the deals in the door. Are they the front line on the broker relationships and hunting for deals?
Yeah, exactly. Yeah. So, okay. And again, in the beginning stage, probably for a 12 to 18 month period, I did the kind of the ground and pound, going through the mud, talking to people, and, some of the efforts that would appear fruitless that a lot of people listening maybe don't want to do. Right. And that's part of the hard work necessary to develop the relationships with people. We're now in any of the marketplaces we're in, we're a go-to person. We're, 1, 2, or 3 on the call. And, and that gives us advantage, because then there's better quality assets coming to us, because they know, 1, we're not going to screw around with it. We're going to be fast on it. And then 2, if we shake on it for whatever, 10 million, we're going to get it done, and there's not going to be hiccups,
Right. You close. You don't, a lot of, these brokers don't get paid unless a deal closes. And if they know, and that's kind of the way the business works, guys. It's brutal until you take down your first deal, but then the clouds part, and they see that you can do it. And
for sure.
But then it's very, very important to manage those relationships, let them see what you're up to, and And then, they recognize that you actually will close, because, so often a deal will go under contract and the people can't deliver. And that's why it's so important, guys, that, we talk about this in my training programs, is that, if you lose out on a deal or you're number 2 or 3, always stay in touch with that broker on a weekly basis, because so often those deals will come back around. I can't tell you how often, that happens, that you'll be back in the saddle on a deal that you didn't think you got. Right.
And the other thing I would say with even in the underwriting piece is, like, sometimes a crappy deal will come to the person, and like a newer guy, and they look at it and they go, it's crap. And then that's the end of it, right? And it's like, no. Look, you need to take the time to properly evaluate it and then connect together with the guy that sent it to you and communicate with them why it doesn't fit for your parameters, so that the guy at least sees that you're serious, right? And that begins maybe you do that 3-4 times, and then the 5th one is decent or good. But if you don't do it those 3 or 4 times, you're not going to get the decent or good,
Yeah, that's so. I'm so glad you said that, because I actually train that specifically. Don't be a black hole. Don't just let a deal come to you and then not respond. You need to give them a credible reason why it didn't work. We need a return of X, and at this price it'll be Y, and so this is why we can't close. We can't do this deal because I'm sure we can't get it for that price. But I want to let you know. Let them see that you did your homework. You took the time to evaluate it. No, I'm glad you said that.
Absolutely.
So that's your guy that finds the deals.
Piece, And then we have a construction manager where he had been involved in overseeing residential construction, and so probably about 24 months ago we began the process with him to begin to oversee construction at assets. So again, with some of the ones that we've bought, had a little bit more on the construction side. A lot of times we're purchasing where it's, light exterior cosmetic stuff or roofs, and then, and then doing the renovations on the turn. But so we purchased a property that needed a bit more heavier construction. So we developed a process inside of our CRM system with Podio to manage that with Gantt charts and, kind of really be able to invite other team members, so the on-site manager, regional manager can see construction progress and communicate in there. And then really with that, he's now progressed into a manner which he'll oversee all exterior construction. And so again, like in the first 90 to 120 days when we take over an asset, bam, he's on it with roofs and AC and paint and landscaping and, interfacing with the other team members so that they can focus exclusively on operational improvements while he's executing the exterior strategy. Because on that asset like that, maybe it's 95% occupied. We're going to renovate interiors on the turn. And so that's more of a done in conjunction with our asset manager and the on-site manager, just, managing that process, because maybe it's 3 or 4 at a time, something like that.
I see. So that's how you do it. You do it on turns rather than, pulling 10 people out at a time and ramping that a little faster. Okay.
Yeah. And so, because then with that, for us, it keeps cash flow stronger, in that near-term purpose, at least in the projects that we're looking at. And then, with those, we're also mitigating the lease renewal by, hey, if our rent target's $950 and let's say they're averaging $800, maybe we're offering them a renewal at, $895 on a 7-month lease. And so we get, 30% non-takers on that. And that's the 3 to 4 that we're going to renovate to market. The other ones, we really haven't had to do much out of the gate, and they've moved from $800 to $895. And then if they, non-renew after the 7-8 month lease, then we take them to market on the renovation at that time. So it's just a kind of a diligence process that we do to manage how many are being turned every month, plus what's the bump that we're getting on the renewals as well.
And so you do the shorter term lease so that you can manage how many people you might have moving at a given time.
Yeah, correct. So even in our lease management, we try to mitigate like December and November as a non-robust month. And then also try to layer where we only have, let's say on a 100-unit project, we don't want more than 10% in any one month coming up available for renewal. And then we can kind of spread that out.
Yeah. So guys, when you take over an asset, it's very, very important when you're doing your lease review that you look at the expiration dates, because if you've got a big chunk of your portfolio or big chunk of your units coming due at the same time. That's a problem. And so what you do is what Randy's talking about here. Now he's in the middle of a renovation, so he'll go shorter term. But if you're not renovating, you're going to want to go longer term. You might go 13, 14, 15, 16 months, whatever, and spread out those renewals. And of course, you don't want them expiring in the dead of winter if you're up north. Now I'm assuming when you said December, January, you're talking about assets that aren't in Florida. You're talking about
not in Florida. Yeah. So,
right.
And even too, like some of the stuff we've got in Georgia or South Carolina, there is a slowdown in, Christmas time, not as many people looking to move in December, that kind of thing. Now, that being said, we still rent units, but maybe not as robustly. So that's where if we had 3 renewals versus 10, we're in a much better position, because then you're, just able to still drive the renewal a little bit better. Whereas if we've taken over assets like that where the previous owner had no thought process in it. And it's like, dear Jesus, you got 15 renewals in December. What are you thinking? And it's because now you can't really go to those people and say, hey, we want to move from 8 to 950 or 9. You can't do that in December because you don't have a lot of traffic coming in behind that.
Right.
And that goes into, I think, and you're so spot on with what you teach and how you operate, but it's like, you've got to be thinking that through and then instilling that in the team. And then it goes back to the team members to make sure they, one, are clear about it so that the on-site manager knows that that's part of it. Your asset manager, or if you're doing the asset management, you're ensuring that that's happening. And then if your regional's overseeing it, that they're on spot with it too. So that and for us, we've kind of documented that out. Like, here's a process or a protocol for our leasing team. It's like, we don't want heavy renewals in this month and this month, because I found that if it's in writing, it's more like, hey, it was in writing. You know what I mean? Like, you've seen it, you've been shown it. It's like, oh, I forgot about that. Well, it's like, good God, it's right there in Dropbox under the leasing protocol.
Good. You brought up Dropbox. I know you use Podio. That's that came from your single family days, because I know all the big hitters and the flippers, wholesalers. They use Podio, and that's how you're managing construction, which is awesome, because I know you can do overlays and do all sorts of things in there. We use Asana as our project management, which works really well with the Slack. But guys, you've got to have some sort of project management solution, a Basecamp, whatever, even if it's just Dropbox, where you've got all your stuff in one place. But there's some great solutions out there for that, and you've got to track it. Back to tracking for a second.
Yeah.
What KPIs do you measure on your assets on an ongoing basis? Do you want to speak to that for a second?
Yeah, for sure. So we're looking at our projected performance, overall, and then we're looking at our, budget that's in agreement with our management company, and then actual. And so we're looking at that on gross revenue, net revenue, expenses. Those are kind of the big ticket items.
You're comparing projections to actual and seeing if you're off.
For sure, yeah. And we do it both on, our projection that we underwrote for over the 5-year time period, and then also tracking against the annual budget that our property management's putting together, and to see if there's a discrepancy between the two, and then also the actual performance. And so those are kind of the big 3 that we look at. And then from there, on a weekly basis, we're looking at the vacancy. We're looking at the marketing track of, how many leads do we have coming in, what sources they're coming in from, what's the conversion ratio of those leads. We're tracking on a weekly basis.
Let me stop you 1 sec. Let me stop you just because I want to hammer something. Guys, when you're looking at the marketing and your, basically your ability to lease units, what he just said is really important, because what you look at, so how many leads are coming in the door, and then you'll know if you've got an issue there where you need to do more marketing or different marketing. Then how many of those people are actually showing up at the property? That would be a metric. And then you'll know whether or not your team is good at bringing them in. And then how many are actually doing applications? And you can see, so you can look at every step of this process to a lease signing to see if there's any places that need to be worked on, that where there's a breakdown, if that makes any sense. I'm sorry to interrupt.
No, that's gold. What you just shared right there. That is the truth of what it is. And so we have a weekly Excel sheet that's coming in from the management team that breaks that down and shows all of that information, so that you can identify quickly, that you've got a conversion problem, and that means your person on the phone at the office is not doing the job to bring them in, like you said. Or then if you've got a lack of approval problem, we've got, 4 apps and one gets approved. It's like, okay, so we're bringing in unqualified traffic. That's not good. Let's look at the traffic sources. So, what you said in the very beginning, this is a business. And so you have to approach it like a business. If you're just kind of winging it or running and gunning, it's not good,
And every business is nothing but people and systems. And so it's critical that like you said, you got to get the right seats on the bus. You talked about that earlier, but you've also got to make sure those systems are in place. And, like you talked about documenting these different procedures and, they were in Dropbox or whatever. That's critical. Checklisting everything, and
checklists are great because checklists are simple. You don't have to reinvent the world. And it's like, that's at least an easy starting point. So you don't have to take down this massive technical component system. You could start, if you don't have good systems, just with a simple checklist. And that's at least a starting point. You can grow from there. I mean, ultimately, that's how we did it back in the single family days, probably, 12 years ago, is beginning with checklist and building the systems and then, becoming systems oriented. And there's great books on systems mindset that you could read as a practitioner to help you think that way.
Sure. E-Myth, Michael Gerber, about franchising, treating it like a McDonald's. Is a great one.
Great. I read that book. I'm like, holy crap, I'm the baker, right? Back in the day, like in 2006, I was like, oh my God, But, the other one of the key metrics that we look at in those elements is, the vacant units and then days in turn or days in renovation. That's super critical. To see, how long is that unit vacant? Why is it not turned? What's the default? And so that's a key thing that then really gives us...
Tell my listeners why that's such a key thing.
Yeah, I mean, it's one, we're losing revenue, but it also reports to us on the activity of the on-site manager and our asset manager in terms of bringing the contractors in, getting the unit turned, renovated, and completed. We've got like a 5-day turnaround time frame. If they're not hitting that, there's a problem.
That's right. So, and the reason is because if you've got if you're averaging, say, a week to turn a property versus 2 weeks, do the math on that loss of revenue and the math on the value component. It'll blow your mind how big a deal it is. Okay. Sure. And I have slides in my presentation in my boot camp because turnover obviously is your biggest expense, and your ability to maximize your and systemize your ability to turn over a unit fast, it can be huge to your bottom line.
Huge on the NOI for sure, because I mean, you multiply that across the 150 units times 12 months and then 1 week. Good Lord, that is a lot of money. And and you can't rent a unit that's not rent ready. I mean, that's they can't move in. And pre-lease it. Hey, look. Don't make excuses. Get the systems working right so that you can get it done. And again, it's sometimes challenging, right? And especially now with COVID, there's some supply issues and this, that, and the other. Where I had just a discussion the other day with our construction manager. I said, "Look, I get it that there's challenges in life. There are always challenges. You and my job is to figure out the solutions to overcome the challenge. So if it's a shortage on this material, and we know we've got as a percentage X coming due in 2 months, order that crap now because it's on a 6-week delivery time, and we'll have it for when those prospective units are coming available."
Yeah, no, we're having some real issues with appliances right now.
Yeah,
and we're actually going to have to go to cream or bisque appliances for a short while. I hate doing it because I don't like them, but you don't have a choice. Yeah. We got to get these units rented. Okay, so talk about your due diligence process a little bit in a little more detail, if you don't mind, because that's such a critical component in this business.
For sure, huge. So when we're actually doing due diligence on one of the projects tomorrow, and so we have our on-site team that's coming, which is comprised of our management team. So we'll have probably 2 to 3 people, 2 that are in the office that do a complete lease audit, so that we're going through, just like you mentioned earlier, understanding, are these people qualified? Did they go through a qualification process? Is there maturity problems coming on the leases as well? And then put together a robust report that's an Excel analysis of, the lease file audit. And so that's critical there. So we usually have 2 people doing that. And then
I'm sorry, I just want to add something
Yeah.
before you move on. So the other thing, like we just bought a 282 unit asset in Cincinnati, and I had a real concern with this COVID business. I literally looked at the employment of every single resident and did a little analysis as to the impact that I thought COVID would have on that particular employer.
Yeah,
just to get a comfort level, you know, and you know, it was mind numbing. Yes, it was, but it was important. So okay. So you do your lease audit, and please continue. I'm sorry.
We're checking that. But yeah, I love that though too, because again, you know, people, they take for granted that these things don't happen, right? That's like, oh, well, you said I'm the mouthpiece.
Yeah.
But then they go, oh yeah, Rod's the mouthpiece. No, it's like, I'm the guy, you're the guy that's making sure that no stone is left unturned so that it's a successful endeavor. It's like, that's the truth of what it takes to be successful at the level that's being achieved. I mean, that's just the truth. So lease file audit, and depending on your size, you know, 2, maybe 3 people, again, anything 150 below, 2 people can knock that out. No problem. And then on the walk, we walk every unit. We've got at least probably 2 to 4 people that are walking the units. We do a full analysis of the interior that we're looking at, you know, floor condition, wall condition, paint color. Is it a change out? You know, the cabinet conditions. We're inspecting the AC, the water heaters, all of it. And then producing an Excel file spreadsheet that really lists every unit. It lists every component on it. It assigns a dollar value to it so that at the end of that, let's just use a 100-unit walk, that we know the condition, whether they're, you know, classic, premium, or elite. We also know every deferred maintenance item that's insufficient. And then we also know a attributable dollar value to every item that's deficient to bring it to the level we need it to be based on what our game plan and renovation plan is for the property.
Nice.
Super critical.
Yeah, you have to do it. You have to do it. And, you know, I would encourage you when you're doing these inspections to have somebody videoing and someone taking pictures, and literally before they walk in the unit, they video the door number, or they take a picture of the door number. Everything behind that is that unit, because that may be the only time you're in that unit for years.
100%. Yeah.
Right.
And that's, critical, because then even too, your on-site manager can refer back to that when lease renewals are coming up to get an idea. Is this a heavy turn? You know, what's the condition of the unit? That's 100% spot on. And again, having it as a system, you know, that's just how you do it, and that information is readily available. Additionally, then we also have our contractor that's there as well. He's inspecting all buildings, all foundations, all ingress, all egress, really making sure that there's any identifiable problems or issues that are significant. We also have at least 2 roofing contractors that are part of our go-to on the team that are inspecting all roofs on the property. We use 1 or 2 of our go-to electrical contractors that inspect all electrical at the property as well, both on the master meters and the individual meters in the or panels within the apartment units. And we're also, checking for confirm aluminum wiring or pigtail, whatever, just those kind of things that may or may not exist based on the age of the complex. And then also some of the things guys miss this though is the plumbing contractor. We snake every main drain line video camera to really ensure that there's no significant issues there.
Yeah, you have to. I mean, if you've got a lot of trees in your complex, or you've got maybe collapsed lines, I mean that's a problem, especially if it's underneath your foundation. Then you've really got a problem.
For sure.
And so very, very important that you do that. I want to circle back to a couple things you said. You have your contractor check the structure, guys. Never, ever, 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 ever buy a property without having it inspected by a building inspector of some sort. You use a GC contractor because, guys, you can't tell how you don't know how well stuff can be hidden. I had someone send me a picture of a building that had been cited, And he's like, I can't see, the foundation. I said, well, go along the bottom. Let me see the bottom. And sure as hell, there was a crack running down behind the siding down into the ground. They'd hidden structural cracks.
Yeah.
And so guys, it's so critical. And I won't buy, listen, I've bought thousands of properties, literally. And I would never buy one without having it inspected by second set of eyes, that
100%.
knows what they're doing. Right.
Yeah. And I would just echo even too, you may think, but like I've seen just on an asset we're buying now that they did foundation repairs, looked, decent. But again, immediately the GC was able to pick apart wham, 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 that this is not right, this is not right, and this is not right. This whole thing's got to be redone for these reasons, where to maybe a less trained eye, they would look at it and say, oh yeah, it's already been done. And it's like, no, it's not been done. And that right there was a $78,000 repair.
Yep. There you go.
And so we were able to get that plus the plumbing stuff for maybe about 120 grand included to say, hey, these are legitimate structural items that need to be fixed. We're not a retrader, but it's like, hey, these are things that were found in the due diligence period. And they're like, hey, we agree, no problem, let's get it fixed. And that saved us and our investors 120 grand.
Yeah. And guys, you don't want to be known as somebody that retrades a bunch of deals, as brokers won't do business with you. But if you find a legitimate thing that wasn't disclosed, or worse, something misrepresented, by God, you go in there and say, hey, what are we going to do about this?
100%.
Now, I want to circle back to one other thing you said, that you said the contractor looks at the ingress and the egress. And so how does a unit, how does an resident get in and out of that unit? And here's why that's so critical. You might see, slabs of sidewalk that have curbs that need to be ground down, or things because of roots and things like that. Safety issues, stairways that are tilted, or banisters or railings that are damaged or loose or whatever. And it's so critical that all that gets looked at. So I just wanted to circle back on that as well. So you've done your interior due diligence, you've done your exterior, you've walked the units, you retrade if you have to. So there you have it. Anything to add? I think. Yeah,
and then we also our team, at least myself or one of the other team members, the management team members, then go and drive and walk the immediate comps. We'll actually go in, talk to the managers inside. Sometimes people get scared about that, and it's like, we just go talk to them, right? It's like, hey, and we talk to them about the complex. Oh, and do you mind if we take a look and see a unit? Do you have one available? And, probably 80% of the time it's a positive, favorable thing. And they're like, oh yeah. And, show you, and it's all good. And what that does is it gives us a very clear picture of, here's these 3 other complexes in our immediate submarket. This is our competitors.
Sure. You need to know what their interior finishes look like. Sometimes you have to mystery shop. You're a devout Christian, and I'll go in and BS and say I'm interested in the unit to get in. I want to get in and see it. Okay. So that's, but the bottom line is you have to know your competition. You have to know them. And the other thing is you want to see, how enthusiastic they are about it. How good do they jump up when they see you come in and a big smile and make you feel welcome? Because, you want to see how you're going to rate according to that. Very, very important.
Sure.
And you've got to know the market, and a great question to ask them when you're there. If you go in and tell them, you're buying the whatever the asset is you're buying, then, they may not be as loose lipped, but I always like to ask them, what do you think about, Willow Oaks, the one you're buying, and see what they say, because they're going to give you all the dirt. They're going to give you all the dirt on that complex that you might not hear from anybody else, when you're mystery shopping, and you can really get some interesting information when you do that. Sure. But yeah, you have to go out and see every single competitor within range, because that's critical, and you have to do it consistently, because especially, I think we're headed for a real contraction in this country, and I think it's coming. I really do. I think it could be after the election, but I think it's coming. And with that said, asset management and tenant retention is going to be critical, and you need to know really on a monthly basis or definitely quarterly what your competition's doing to beat you out, so that you can stay occupied through. A downturn. So, yeah.
We require our on-site managers to do a monthly market survey keep the pulse of what's going on at the competition. They've got to upload that report, and it's every month, and then that way our asset manager can see it in their weekly calls. And then each month see what the competitors are doing and just making sure we're on track. Because no doubt this is going to be the time of operations. Like you could have been blind, deaf, and dumb and made money in this market the last 5 years or 7 years with cap rate compression and, all that's taken place. But just exactly what you said, it's like you got to have your hands on the wheel at this time, especially with the economic slowdown that we've facing or like you said, even face potentially even worse.
Yeah, we just did a special meeting of my multifamily boardroom mastermind, and it was asset management in times of crisis. And it was all these things these extra things that you need to be paying special attention. A lot of it was basics, getting back to basics, but being so diligent right now. It hasn't happened yet. It's been, angels singing right now, but it's coming. And so, being ready for it, being, forewarned is forearmed. But, well, listen, Randy's company is Prosperity Capital Partners, and that's prosperitycapitalpartners.net. Randy, I really appreciate you being on the show, brother. You did
100%.
Added a ton of value today. It was great to see you.
Great to see you too. Let me add one more team member that sometimes people miss, and this is super critical.
Please.
You got to be a part of a group like Rod's or around other people. That you're not just a solo practitioner. You've got to be around other high-level operators, mentors that can challenge you, encourage you, and help lay a pathway that you see these things in a regular basis. So that's the truth. And
thank you, buddy. No, I appreciate that. No, it's critical. It's why my students have bought somewhere between 20 to 30,000 units. And I've only been doing this for a little over 2.5 years, not even 3 years yet. So awesome. It's having that environment, that ecosystem, to be able to support you and do deals with and learn from and grow with, and, rising tide lifts all ships. Well, thank you for bringing that up.
Hey, I appreciate being on. Good to see you. And when I'm down that Sarasota way, I'll reach out to you and
Sounds good.
A chance to connect, brother.
Sounds good. All right, buddy. Take care, man.
Take care now. All right.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 41411. That's mentorwithrod.com or text CRUSH to 41411.